of short-term trading live with Oscar. Good evening, traders, Omniacs, YouTube fans. Thank you so much for tuning into these videos. Remember, subscribe to my videos and then hit that little alert button so that you will be notified each and every time I put one of these educational videos out. Let me just show you something. Forget about the risk disclaimer. See that flag? See, remember this ugly flag we've been talking about for 15 days with nasty projections? Well, right now we're above the flag, and that leaves me freedom to talk to you about the much better things that take place in this market, the slightly longer term view. Being that we are not under the weight of those bear flags, which generally will push a market down, and I will say this about that flag I just showed you, we're not out of the woods. You still got transportation average and Russell steeped in those flags. We're not out of the woods. As long as we get up and continue on away from that flag I just showed you, then we are out of the woods and things look good. But for now, we are, for day traders, we're above the flag. Gives me liberty to show you something really cool. You're going to love what you're about to see. Pull up a chair and get ready. This is a very risky game, as we know, trading futures, trading stocks, trading ETFs, trading anything at all, options, you name it, extremely risky these days. Volatility has gone literally through the roof in many markets. If you do not understand the risks behind this game, do not play. If you do not have risk capital to lose, do not play. But if you do understand the risks and you do use stops and you place them first before you trade, well, let's get started. I got a great video for you. This video, 1991st, we're almost at 2000, kids, coming at you for trading on September 9th, 2019. So it's 9/9/19 for you guys keeping track out there. I don't think it means anything, but there's a lot of nines out there. Before we get into the video, hey, what'd you think of that tennis open? Wasn't that a great match a few minutes ago? I can't believe Nadal pulled it off, but of course you'd expect him to. But that was great. Both of you guys, a round of applause. Great, great tennis. Anyway, on to the board. Green Omni, E-mini S&P, NASDAQ, and Dow. And I am here to tell you we're going to look at a slightly longer term view now that we're getting away from that flag. The Omni year-end targets remain valid. My year-end targets are for higher. Why, would you ask? Why? Because stimulus, it's coming from every direction in our markets. Traders, I've got great charts I'm going to show you in just a moment. It will show you that we're getting stimulus from every direction, and why, unless we end up back into the bear flag and then these ugly projections become valid once again. As long as that doesn't happen, especially for short-term trading, I am looking for my Omni targets to be hit before this year ends. Now, if you've been following these videos since 2006 when I began putting them out, Omni has almost never missed the year-end projection. It gives us to us in the beginning of the year, and it turns out to be right at the end of the year. I know, I'm as shocked as the rest of us. It is right year after year. The beginning of this year, I gave out 12,620 to 12,888 in the transportation average. I gave out 28,500 to 29,000 in the Dow. The Dow was at 22,500 when we gave out that recommendation. You know that, right? 22.5. You know what the tranny was? 8,800. We're getting much closer to the Omni year-end targets that have been on this board all year than we are to the downside, right? And now that we're away from those flags, I can talk to you about why the stimulus looks great, why these projections hold true for the end of the year, and why these projections, if we get away from that flag, will just be erased off the board. Traders, I'm about to get into the charts. Let me just tell you about one thing. There is one OmniCamp left for the year. It is December 5th. September's OmniCamp has been spoken for. December 5th, my last OmniCamp for the year. It is the last OmniCamp at this year's prices. Starting next year, right after December, the prices of OmniCamp will double per ticket. Double. This is your moment to call me, come to livewithoscar.com, fill out an OmniCamp application, take advantage of this year's 2019 pricing. You will get a laptop programmed by me with the Omni in it, and the Omni is Oscar's market navigational indicator system. That will be pre-programmed right into your laptop. We house you. You pay no hotel expense. We feed you fantastic food, booze if you drink, no booze if you don't. We encompass you with everything that you will need. You get all your supplies from us, and all your transportation is covered by us. Call me. This is the best OmniCamp. This is the best opportunity you will ever get in your life to train with someone like me who can teach you how to spot things like what you are about to see next. With no further ado, let's go look at some charts. Okay, traders, this is a daily chart of the E-mini S&P depicting that scary bear flag that projects us down to 27.15. However, we've gone up through the flag. We are above the 50-bar moving average. We are above the top of this flag. I've got a green Omni. I don't care about this flag anymore right now for today, for this day. Forget you, flag. Let's get into something much better than the flag. Now, traders, this is my Omni average. You've got markets all over the place holding this Omni average like crazy. Bitcoin being one. As you can see, when you were under the Omni average, it influenced the market. You stayed under the Omni average. Once we got above, market exploded, came back down, hit the Omni average, and has bounced to here since. Also, look. You see the wedge? This is absolutely building into something. It's going to get ready to break out at some point, and this formation tells you it should break out to the upside. Omni average. Watch what's going on here. E-mini S&P, Dow, NASDAQ, you name it, you're going to see it. Here's the Dow. Omni average. What happens on the weekly Dow is you bounce off the Omni average and have a nice run. You got through it once. The only time you were able to get through it, otherwise you hold the Omni average on the weekly chart and run up. That's what's going on right now. E-mini S&P, weekly bar chart, same exact look, holding the Omni average and running. We're here right now. So far, so good. Let's forget about all that daily stuff with the flag. Let's look at what we see before us. The weekly shows us that maybe, just maybe, we are going to just get away from that flag and keep moving higher. The NASDAQ, look at how many times the Omni has held the NASDAQ in check. Even here when it went through, it was very quick and came right back. And now, after just about hitting the Omni here and trying once again here, we're sitting up there. New all-time highs would only be right there, right? We could get there. Gotta love the weekly. Once again, on the average, it's not above, or I should say markets are not above in every market. This is your Russell 2000. Below the Omni average right now. And same thing with your transportation average. You are below the Omni average right now. However, what's been leading the market lately has been the Dow, the NASDAQ, and the E-mini S&P. We will absolutely continue to follow that lead. Now you've got the stimulus coming in, traders. What creates stimulus? Cheap commodities, cheap raw materials, cheap crude oil, cheap interest rates. These things absolutely are a stimulus, and the Fed lowering interest rates. All of these create a stimulus. Okay, corn. Look, this is a commodity. Look at how it's been in a bear market. Cheap commodity. What you're going to use to feed all of the feed animals out there, the herd animals, is getting cheaper by the day. That, my friends, is a form of stimulus. Look at something like wheat. Look at how long this has been going down for, my friends. That is a stimulus, and it started out with a wonderful head and shoulders, broke out down below the head and shoulders, and has continued lower, now below the 200 bar, but point being, wheat, just like corn, bear market. Look at something like cotton. Besides Lululemon, who doesn't use cotton when they make clothing, right? Look at cotton. The whole world pays less for cotton. Bear flag breakdown after bear flag breakdown after bear flag breakdown after bear flag breakdown, continuing. However, the arrow is the same. Look at the direction it's in. This is another commodity, a raw material. When raw materials are getting cheaper, it is a form of stimulus. Then you've got something like copper. Now we're switching over and we're looking at what you'd use in industry, right? Industrial metal. Look at how that's been in a bear market for a long time. Stimulus. Look at something like crude oil. Look, crude oil was up here just a few months back. Look at that's been in a severe bear market, even though it's had a little bit of a consolidation here. From the beginning of the year till now, that is bear market. That is a stimulus. Traders, remember 2008 when crude was going through the roof and everyone prayed for crude to go lower because lower crude was a stimulus? It still is a stimulus. Crude oil going lower. Heating oil, is this not a stimulus? Heating oil dropping in price all winter long practically. Heating oil going lower. Look at this one. Crude oil is, gasoline. Is gasoline getting cheaper and cheaper and cheaper? Not a stimulus, a worldwide stimulus? Yes, it is, kids. These are all reasons why we're going to make our projection for the end of the year. Now you've got T-bonds. Rates dropping is an economic stimulus. What does that mean? When bonds go up, the rate goes down. The same thing as if the Fed lowered rates. This, my friends, is absolutely a stimulus because this is what the Fed would do if they had to try to bail us out of some sort of a recession. Bonds going up is an absolute stimulus. 10-year notes, look at that stimulus. This will have the same effect as the Fed lowering interest rates, and the Fed is lowering interest rates as we speak, meeting after meeting. All of this is a stimulus, kids. And then you've got all of this stimulus taking place, and you can't even blame a hyperactive dollar. The dollar is stable. It just seems to stay within these prices for a long time. It's been stable. It's not too expensive. It's not too cheap. You cannot blame the dollar on those really reasonable stimulus packages I just showed you. So with a decent currency and all of that stimulus I just showed you and the Fed lowering rates, I don't care about short term, slightly longer term, we make our Omni projection before the year is over. Okay, traders, you've seen those charts. You've got my technical opinion. Now, why does my technical opinion matter? You see this jacket? You see this badge? I started wearing a jacket just like this in 1982. I have spent most of my adult life down on the trading floors. I didn't leave the trading floors. I spent every day and night that I could there, all the way up until 2006-07 when the floors went electronic. I am an authority at what I am showing you, and I have learned in a place in this heartbeat of Wall Street, in the center of Wall Street, where most of you will never, ever, ever have an opportunity to learn what I have learned over the years. I am an authority when it comes to these charts. I am an authority when it comes to these markets, and I absolutely deserve to wear this jacket. I am the man. Please come see me live with Oscar.com. The rest of it, you've seen the stimulus coming through in the way that commodity prices are dropping, industrial use metals are dropping, but not the precious metals. That's a different story. We'll cover that during the week. So you've got commodities dropping, you've got interest rates dropping, you've got stimulus, you've got gas down, you've got heating oil down, you've got crude oil down, you've got stimulus coming out of the wazoo to push our markets higher. They're about to cut rates at the next meeting. That is just going to continue to send us. So year-end targets remain valid even though we get these price fluctuations in the shorter term. Now, I will not mention the bear flags again unless we get back into them. Otherwise, they're gone and off to the races we go. All right, traders, thank you for tuning into my videos. Remember to subscribe, like, and share these videos all over the internet. Leave your comments below. I'll be happy to reply to you. And remember, keep your emotions out of trading. I know that's not easy. Put your stops in first. Then say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Bitcoin. 2.5 years ago, I bought Bitcoin. I told everyone on YouTube it was a 5-year plan. We still got 2 years and 3 months, baby. I change it every month, the countdown. I expect 35,000 Bitcoin by the time we get there. We shall see. You'll never know. I'll see you all at livewithoscar.com. Past performance is not indicative of future results. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.